Hello everyone, my name is Majid Rahimi and you're watching part 7 of our classical technical analysis course. If you want to watch this course from scratch, you can reach the first video here. Don't forget to click on subscribe button and the notification bell under this video if you're not a subscriber yet. In this video we will learn about another family of patterns called triangles, and we will see how symmetrical triangles and the right angle triangles work in the market. A symmetrical triangle is composed of a series of fluctuations. Each of them is smaller than the other. The picture shows the minimum requirement of a symmetrical triangle. We need a top, then a retracement, then a recover to somewhere lower than previous top, and another retracement to somewhere higher than previous retracement. And finally we can say we have symmetrical triangle when price goes up again from our last bottom. We can also have symmetrical triangle in downtrends, as what you can see in the picture. We cannot say what will happen after we see a symmetrical triangle until a penetration of price out of triangle. Symmetrical triangles happen for both consolidation and reversal in trend. If price penetrates upper line, the trend would be bullish, and if it penetrates lower line, the trend would be bearish. For both penetrations, 3% of stock price is needed, and as I said before, this 3% is not valid for all markets. There are some points about volume in symmetrical triangle. Volume inside triangle becomes lower as we go ahead in chart to the right. For a valid signal of uptrend, we need a high volume penetration, and for downtrend we don't need it, as we've talked about it in head and shoulders pattern. There are some important points about symmetrical triangles. This pattern is not as valid as head and shoulders, and it will work in nearly 75% of times. So we should have some tactics to avoid significant loss in wrong signals. We will talk about it later. The other point is that in some cases we have to redraw triangle because fluctuations make some changes in high and low boundaries. The other point I have to mention is that the more time it takes for price to penetrate out of symmetrical triangle, the less powerful the pattern is. The best result of triangles happens between half and 3/4 of triangle. If price goes forward more than this, it's better to forget about symmetrical triangle. There's another type of triangle which is much more successful than symmetrical. It's called right angle triangles. There are two kinds of right angle triangles: ascending triangle, which shows the tendency of price to rise. It's confirmed after penetration of upper boundary. The difference between ascending and symmetrical triangle is upper boundary, which is approximately horizontal in ascending triangle. Descending triangle shows the tendency of price to fall. The difference between descending and symmetrical is its lower boundary, which is horizontal. These triangles can be reversal and consolidation. The important thing to see the direction is boundaries, to see which one is horizontal. Volume characteristics in these triangles is the same for symmetrical. We have learned a lot about triangles in this video. We will see how to measure a minimum target for triangles, and also we will see some examples in real charts in next video. Don't forget to like and share our videos if you like them. Thanks for watching, have a good time, and bye.